Much in the art of cash flow management is about increasing your cash balances by speeding up cash inflows and slowing down outflows. In this lecture, I'll list a series of tips to speed up your cash inflows.
The first tip in this section may seem the most obvious. Ask for the money as soon as possible. Some owners are so busy working in their business that billing their customers slides to a lower priority. The money due to you won't arrive until you ask for it. Sending your invoices by email means your customers get the invoices faster than snail mail. Many invoicing programs or email programs can tell if the invoice has been viewed. You also have proof that the invoice was sent. Emailing also allows you to easily send the invoice to multiple recipients if you don't know exactly who to send it to, or if your main contact is gone. It also allows you to easily send past due notices to multiple contacts at your customer's workplace, which puts more pressure on whoever is holding up the payment to process the payment. The accounts payable or AP department has reported to me at multiple companies. Sometimes they never received the invoice from a manager to be paid. Sometimes AP made a mistake and didn't pay the invoice on time. Checking in with all your contacts with a short email helps fix the problem more quickly. If you bill after the service, make sure to do it as soon as possible. The longer you delay, the harder it is to collect payment. You can bill before the time of service to accelerate cash inflows. You can often request deposits or progress payments on large projects or custom orders. For example, you may request a 50% deposit at the time of a custom order. I worked for a company that produced concerts. The industry standard for major performers was a 50% deposit 30 days before the show, and the rest paid the night of the show. Projects that take a long time are good choices for progress payments. Construction jobs are an example of large projects that are paid on a progress basis. Sometimes your customers just need a little incentive to pay you more quickly. It's very common for companies to state the following payment terms in their invoices. Due upon receipt communicates a sense of urgency, which makes the customer more likely to pay your invoice immediately. Putting a due date in the future allows customers to delay until that date. They may have been completely fine to pay it immediately. If you consider due upon receipt as too unreasonable, then pick a later due date. The number of days is totally up to you. The word net, followed by a number of days, like 10, 15, 30, etc., communicates your expectation of when payment is due. Your customers shouldn't be surprised when you call on payments that haven't been received by then. 2% 10 net 30 provides a discount to the customer for making a quick payment. In this example, the customer can reduce their payment to you by 2% for paying within 10 days. Otherwise, they should make their payment within 30 days. Is offering this discount worth the cost to you? You have to assess your borrowing costs and the lost opportunities due to tight cash flow. If there's no penalty for paying late, some customers are happy to hold on as long as they can to the interest free loan that you're giving them. State a late fee that will be assessed if payment isn't received by the due date. Your customers take paying you as seriously as you are about collecting payments. Allowing payments to trail well after the due date trains the customers that they can pay late. Your accounts receivable are interest free loans to your customers. There is a cost for those funds. Don't let your customers create big costs for you by paying late. Monitor your past due report at least weekly to identify customers that need a call or email to nudge them to make a payment. Another name for the past due report is the accounts receivable aging report. Aging reports group your invoices into time ranges of how far past due they are. For example, less than 30 days past due, 30 to 60 days past due, 60 to 90 days past due, and over 90 days past due. Pick the number of days past due that seems right for you to call on late invoices. For example, you may send an email at 7 to 15 days past due, a paper statement at 15 to 30 days past due, and then you call them at 30 to 40 days past due. Your accounts receivable system could automate some of the process. It can be set to automatically send the emails or print past due notices. Yes, you need to call your seriously delinquent customers. Small business owners usually don't call because of fear. They're often good at sales and servicing for the customer, but collecting feels like nagging, annoying, or making the customer mad. I know it can be tough, but the more you do it, the better you'll get. You've provided a service, and they owe that payment to you. They know they owe that to you, and your call is just a reminder of their promise to pay. The collections department at a $2 billion credit union reported to me. Many of the staff in that department used to work in our call center. One time I asked someone new to the collections department how the transition from the call center was going for them. They said they enjoyed the collection calls much better. In the call center, they would answer calls from customers that were angry because the credit union made a mistake or the customer was struggling with the website or mobile app. We were wrong, they were right, and they were ready to tell us about it. Now, This person called on people who were past due, and many of them were apologetic. Either they missed the payment by mistake or knew they owed the payment but just hadn't dealt with it. You are not a bad person for asking for money that's owed to you. Let me give you some tips. First, write a script or outline for your collection calls. This takes away some of the fear and unknown of the call. It also allows you to write out how you want the call to go. Thinking of the right things to say can be tough when your emotions are high during a call. Writing an outline and scripts for key parts of the call while you're calm allows you to find the right words. A second tip is to ask them to respond to you with a commitment of when they will make their payment. They may not be able to make it immediately, but they must state when they can make the payment. All future conversations are just holding them to their word. I'm not saying to be unprofessional or disrespectful. I mentioned in the last slide that the collections department manager reported to me at a credit union. He told me that he trained his staff to always treat the borrowers respectfully. His practical definition for this was that the borrower would have a civil conversation with the collector if they ever ran into each other at a supermarket. You can be empathetic without enabling, and you can be direct without being disrespectful. The bottom line for these first few slides is that your cash is often sitting in your customers' bank accounts. Find ways to get them to send it to your bank account. Ask for it. Still, collecting on payments terrifies some owners and just sucks the life out of some people. That's okay, but you need to hire someone to do it for you. A collections agency can do this for you. You give them a list and they will work to collect from those customers. They will keep a percent of what they collect as a fee. The collections companies I've used in the past kept 30 to 40% of the payments. They will charge a higher fee for older receivables and receivables that are harder to collect. You'll also need to be realistic about how much effort they'll put into collecting your receivables. They won't spend much of their staff time calling on small invoices. They may only send letters to small accounts. They will also learn over time if you sell to customers that have little chance of repaying. Those sales are a loss to you and a waste of time for them. You usually don't turn your receivables over to a collection company until they hit a certain number of days past due, for example, 90 days. In other words, it's best not to turn all your past due accounts to them. You'll pay them 20 to 50% of anything they collect, so you want to make the first attempts to collect the money that's easier to collect. Try to collect for a while and then give them the accounts that you aren't able to collect from. Remember that they work for you, and their collection methods will reflect on your business. Make sure you understand their collection methods and shop around for a company that matches how you want your customers to be treated. Get copies of the letters the collection agency will be sending. If you are talking to a customer who received a call from the collector, ask the customer how the phone call went. Protect how your customers are treated and always remember that the collections agency works for you. Yes, they can use aggressive tactics to get a few more dollars, but you will pay far more in the lost goodwill of your customers. Some owners think that these customers are worth nothing to their company and can be treated roughly, but these customers talk to other customers and they post on social media. Banks have a way to help you collect your money faster to automate the cash flow process. Allowing customers to pay online or over the phone with an ACH payment, debit card, or credit card means not waiting for a check to arrive. An ACH, automated clearinghouse payment, is an electronic way to deduct funds directly from the customer's checking accounts. You can also use payment systems like PayPal or Venmo to receive payments from customers. Put the electronic link to pay you on your invoices. You can scan your deposits from your desk rather than having them sit until your next trip to the bank. When I was the CFO of a health clinic system, I would notice that our cash was sometimes low at payroll time. The clinics would have multiple days' deposits of checks sitting in their desk drawers waiting for someone to take it to the bank. I would call to remind them to take the deposit to the bank because the funds to cover everyone's paychecks were sitting in their desks. Having the bank make the deposit for you means the cash is credited to you even faster. Lockbox services are when checks are mailed directly to a PO box where the bank picks them up and deposits them. They then send a file to you with the remittance info like the invoice number or account number. You then post that to your accounting system. In a fully automated system, the file from the bank can be imported and posted directly into your accounting or accounts receivable system.